Thank you for checking out Philman Roll-Up and Associates Municipal Market Update for the week of October 19th, 2020. My name is Adam Bauer. I serve as CEO and President of Philman Roll-Up and Associates. Philman Roll-Up and Associates is a municipal advisor to government. We've changed the order of our slides this week because the most important factor right now appears to be the amount of supply in the market. If you're watching the local news, you hear a lot about the election, but in our little municipal market, it's all about the supply. And so we're going to start with that because that's really driving the conversation around everything else. So on this first slide, you see those dotted lines, 18, 19, and 20. And the red and the brown represent 18 and 19. And you can see where the bar charts are much higher than that. Yeah, for that matter, the dotted green line is much higher than that. The dotted green line is the average weekly amount of issuance of municipal bonds, and the bar charts represent the most current weeks. What you're probably noticing is those bar charts are more than double what a lot of those dotted lines are. And so that really signals to you that we have a tremendous amount of municipal bonds being priced in the market. So a lot of municipal agencies want to get into the market before the election. It looked like there could be some uncertainty. No matter who wins, it may take some time to figure it out. And so if you can get your bonds sold before that first Tuesday in November, I think a lot of municipalities really worked hard to get that done. That increases supply. So what's really important now is how much demand is there given that we have such a tremendous amount of supply. And fortunately for us, we have seen an inflow into the municipal bond funds. Last time I did this, we did see 1 week of an outflow. I mentioned to you that was something we need to talk about or monitor. And we're fortunate that more money is flown in than out into municipal bond funds, but still probably not enough to absorb all that amount of issuance without having some rise in rates, which we've already shown you a bit. So good news is we do have money flowing in, but it may not be quite enough to absorb that large amount of supply we have coming to the market. And on slide 4, we start to detail some of that. The brown bars represent the range of interest rates for each one of the maturities. And for a long time, let me take a step back. That red line represents the municipal market data curve for each maturity. And for a long time, that was at the very bottom of those bar charts from year 1 through year 30, meaning we're near historic lows in almost every maturity. You probably noticed somewhere around year 8, that red line starts to lift off the bottom of the brown bar charts. And what you're seeing there is we are still very low in interest rates, but not at the all-time lows. I've also shown you that 30-year maturity at or near 1.5%, and now it's at 1.72. So I'm sure not too many investors are happy to loan money for 30 years at 1.72. At least they do get the double tax exemption. But that's still very low, but it's quite a bit higher from where it was. Now, if you look at the first year maturity, that was as low as 0.11, and it's gone to 0.15. So it's certainly gone up, but not to the same degree that the 30-year maturity has. So you're starting to see a slightly steeper yield curve, which is the more normal environment. But still, this would still be considered a relatively flat yield curve, and rates are still very low. Another chart we started showing you just a month or so ago is if you have two AAA credits, the Treasury versus the 10-year MMD, or the 10-year Treasury versus the 10-year MMD, you would oftentimes have the US Treasury have a slightly higher yield than the municipal. And that's because the US Treasury charges federal taxes. Investors who have owned treasuries have to pay federal taxes on that, but not state taxes. Where most municipal bonds, the investor gets a tax exemption for both. And so you saw that trend until the pandemic hit, and then you started to see the MMD go a little bit higher. That was an investor saying, even though the yields are the ratings are pretty similar or the exact same, we would prefer to own treasuries over municipals. Once again, treasuries are easily traded, and the federal government has the power to print money if they need to, whereas other municipalities can't do that. And so now that you're seeing that the 10-year MMD is higher than the 10-year treasury, you're seeing a risk adverse environment where they would rather own municipals than own treasuries, and we'll continue to monitor that. You did see in August that flipped and changed back to what we were seeing at the beginning of this year. But now it's once again gone back to where the MMD is higher than US Treasuries. Now here's how that taxable volume is coming into play. And we've talked a bit about that. You can certainly see how the pandemic brought taxable rates up in that March, April timeframe. And then if you shift to your viewing to the right, you start to see those brown lines really starting to be pretty high. And that's the amount of supply. And so then what you can also see is that green line has drifted up in recent weeks, but now really started to stabilize and even maybe decline just a tad. But that's the single A or A plus, A minus treasury, taxable rate. And so you saw that drifting up with all the supply, and now it's kind of hung in there. The next 2 weeks are very important because we're going to see a lot more taxable deals come to market, and we'll see if there's pressure to push that upward. The economic calendar. And I think really there's these economic things that we all need to watch, but we also need to watch election, COVID infection rates, and the stimulus bill. Right now, there's some real debate about whether the stimulus bill is going to pass or not. But these are other things that you should watch, but don't forget about those three that I just mentioned. Finally, the Film and Roll app registered municipal advisors are all listed here. Encourage you to reach out to any one of them. But I'll be back in front of you in 2 weeks, and I thank you for your time.